it is sort of a worst case scenario study from that perspective. But yeah, it still generated results that we're going to be producing almost 70,000 ounces of gold a year over the 6 years of full production that are in this study. And those ounces are going to generate $70 million Canadian in free cash flow over those, on average, over those 7 years. And the IRR, the internal rate of return on this thing, is 255%.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
Welcome. This is Financial Survival Network. I'm your host, Kerry Lutz. We are getting an important sponsor update from West Red Lake Gold's VP of Communications, Gwen Preston. Gwen, it's great to have you back on the show. Hey, the big news, you released your preliminary feasibility study, which we're talking pre-call, should be called the absolute worst case scenario. And in this case, the worst case scenario looks pretty good.
Yes, I love that capture. I mean, worst case scenario in that you use the independent consultants who do these mine plans use extreme conservatism, right? So the cutoff price that they used to determine which tons were economically viable to mine, that was $1,680, $1,680 reserve price cutoff for determining which tons are economic to mine. I mean, that's $1,000 below the current gold price. So that's, as a starting point, really conservative. And then you apply that. So that squeezes down the amount of tons that you can mine from the amount that you have nowhere there. It squeezes it down to just the highest grade, small areas. And then you apply a conservative gold price to the financial model. You apply a $2,200 long-term gold price to the financial model, which squeezes things down again. So yes, it is sort of a worst case scenario study from that perspective. But yeah, it still generated results that we're going to be producing almost 70,000 ounces of gold a year over the 6 years of full production that are in this study. And those ounces are going to generate $70 million Canadian in free cash flow over those, on average, over those 7 years. And the IRR, the internal rate of return on this thing, is 255%, which is, of course, a crazy number in the grand scheme of mining studies, where usually you're desperately trying to get above 30%. And if that just reflects that we bought an asset that was mostly built, and then we raised $100 million we raised and spent $100 million last year, so that the denominator in the IRR, the amount left to spend, that number is really small. That's why you end up with a really high rate of return, because we're pretty much done the spend. We're turning this mine on very soon. So yeah, really nice to get this study out the door so we can talk about production, even if it is a very constrained version of what we are actually going to do.
Yeah. And imagine if it showed the most likely scenario, that IRR would go astronomical, exponential.
I think so. I mean, we are going to mine, we very much expect to mine higher tonnage than is in this on a daily basis, higher overall tonnage. So we expect it to be a bigger mine on a daily basis that lasts longer. The grade might be a bit lower than what's in this, because these red lake systems have a really high grade core to the vein, and then they do have a halo. So call it another meter of width, a half meter on each side, that averages 3 or 4 grams per ton. That 3 or 4 gram per ton halo, that got excluded from this study because it wasn't economic based on that 1680 US gold price. So it'll be slightly lower grade, but it'll be more tons annual, daily, and over the life of mine, and that will economically work out better. So we're going to produce the number of ounces that we state or more, and we expect hopefully that the costs will be a bit lower as well, because that wider mining approach, long hole stoping instead of the cut and fill that's really focused on the narrow stuff, is about half the mining cost. So there's a lot of potential upside in all of these numbers.
Yeah, and then even without the upside, 255% IRR, hedge funds in New York City would kill for that kind of IRR. In fact, they've been known to. But we look at operation date Q2, that's still on track?
Yes. So in Q2, well, I guess in Q1, in March, we're going to turn on the mill so that we can process the bulk samples. And then, so that'll process the bulk samples, which is really important. We'll be able to compare the tonnage and grade that we say we're going to deliver to the tonnage and grade that we actually delivered for those bulk samples from a few parts of the mine. And then we will roll into production mining. Now we want to say that it's sort of near the end of Q2 that we're guaranteed to be doing it. But that's absolutely the timeline that we're on.
That's pretty exciting to see project like this given up for dead, resurrected, and made operational and profitable. It's pretty good. Are there any obstacles you see in the path? It's just a question of doing the work now. Is there anything potentially that we should be aware of?
Really the key obstacle was making sure that we had the money in place so that we could do the work. Like you said, the other thing is just getting the work done. And that was the other big achievement that you and I discussed pre-call that's happened since the last time I was on the show, which is that we closed the deals to put the money in the bank so that we are funded to get this thing into production. So that was, we did a financing in the fall, but then at the beginning of this year, we closed a debt facility with Nabari. That's a $35 million US debt facility. We've pulled the first 15 million of that, still 20 million available on that. And that is the amount of money that we need to get this thing up and running. So that was the biggest de-risking step, perhaps. I mean, the study is important because we want everyone to have a base case for what we're doing. But having the money in the bank, now we can really put our heads down and just focus on making sure things like the mining at site ramps up in terms of rate and maintains accuracy. Like that's the kind of thing that is really essential in success at a high-grade underground gold mine. Your miners have to mine in exactly the right places, and they have to do it with enough efficiency that you're doing the meters a day that your mine plan calls for. And so this test mining that we're doing right now, that's the stuff we're going to put through the mill in March. This test mining is amazing for that. It is truly practicing before you do. So like the miners are practicing on mining in the range of environments that's there, close to old stopes, not close to old stopes, narrower areas, wider areas. We're practicing it so that we know exactly the right approach to be safe first and then accurate and efficient. So just ramping up that meterage and making sure that things are happening on site with the kind of, like I say, accuracy, reliability, and efficiency that they need to, that's really fundamental in a new mine. So that's the biggest obstacle for us as a team over the next few months.
Right. So it's just basically bringing all the details together. And this will mark Shane's 6th successful mine restart, which has got to be some kind of record out there.
It probably is. I wonder if there's anybody else between builds and restarts. He's absolutely done a lot. He's at the mine site right now. We were in Toronto last week marketing this pre-feasibility study, and he flew to the mine site and he sent me a picture of himself from inside. You fly to Red Lake from Winnipeg, and it's about a 45-minute flight on a very, very small airplane that's run by a company called Bearskin Airlines. And he sent me a picture from the inside of the plane, which seats about 16 people, I think, one person per side. On each side of the aisle. He was the only person on the plane, and it was -3 Celsius inside the plane. And he, despite all of that, was very excited to be heading to Red Lake because he loves being on site and making sure that this operational readiness is building up.
Yeah, he's very much a hands-on operator. And I guess thank goodness for Canada's bush pilots that kind of make the industry work.
Absolutely.
So we're going to look for Q2 later in Q2 start to production, but everything is happening now. Hey, we'll see you in Vancouver at VRIC. Everybody go over to westredlakegold.com, sign up for notifications. They're coming fast and furious. And the ticker symbols in the US, WLRGF, and of course in Canada, WRLG. Gwen, we'll see you soon. Thanks so much.
Nice to see you, Carrie. We'll see you next week.
The Financial Survival Network.